Yeah, we are live. We are live right now. We are live and direct. Hello. Good afternoon. Good evening. Good morning. Wherever you are joining us today, I salute you. Thank you very much for joining. Okay, so before we start, we need to first of all clarify that you can all hear me. So if you can hear me, just type yes, I can hear you. Then we can move on straight on. We're on fire today. We are on fire today. Hello, who is online? Yes. Let me know who you are. Let me know who you are so we can crack on with the business today. Thank you so much for joining. So this is your trade mentor. We do this on a regular basis. We try to do it every week, so we can show guys and ladies and gentlemen what trading is all about. How do we use this strategy to make money in the forex market? And the strategy we are talking about is inside bar strategy. Inside bar is a price action strategy. Some of you guys know a bit about price action. Okay, Pompey, hello, how are you from California? Good to see you. And Andy, yes, Andy, where's Andy from? Right, so some of you already know how to use price action to trade. So this is also a price action kind of strategy because we are looking at a breakout of an inside bar. Okay, maybe some other times I will show you some of the price action that we can combine with this strategy. But it's a powerful strategy. It can be traded on its own without any other thing. But if you can add, okay, yes, so if you can add price action to it, that would be good. You know about the higher highs and the higher lows. That is when price is going up. That is uptrend. So when price make higher high, but when it retraces, it makes a higher low. That means we are on uptrend. And opposite is the case when price is coming down. All right, South Africa, hello from South Africa, good to see you. Okay, Somalia, Zaki, hello Zaki, hope you are doing great. Okay, so I'm gonna quickly share my chart with you. I think you can see my charts perfectly well. You can see my chart, which is fantastic. So as we go along, in case anybody has any question, just pop it in very fast. I will get to it, maybe not immediately, but as soon as I can, I will get to it and answer those questions. Okay, so we are talking of inside bar strategy. All right, so what is an inside bar? An inside bar is one that I'm showing you on the screen here, right here. You can see this blue square or blue rectangle. It is protecting this black bar, inside bar. Okay, why do we call it an inside bar? Inside bar is a bar that is smaller than the previous one. Both the high and the low are inside the previous bar. And when I mean high and low, I mean the wicks, and the high wicks and the low wicks. The top wicks and the bottom wicks, they are all inside the previous bar. That is what we call inside bar. It's very easy to identify. This is another one here. You can see this bullish bar here is contained inside this bearish bar. That's why we call it an inside bar. Just like this one is an inside bar to the big one here. Let's move a bit. Look at this one. Also, it's an inside bar to the bullish candle. Let's see more. Okay, this is also an inside bar to that bullish candle. So I'm sure you guess why we have all these rectangles is to identify the inside bar for us. Okay, it does a pretty job to identify it, but it hasn't done 100% job because sometimes I do find that it misses out some. Okay, it does misses out some. So if you find something that is missed out, don't worry about it. You can still take the trade because the indicator misses out some of it. Okay, the way it's been written. Maybe somebody forgot about some of this criteria to find inside bar, but the ones that he found, they are all correct. Okay, just that it misses out some. All right, so on the bearish side, you can see this is an inside bar, and you can notice that the color of this rectangle sometimes is this color here. Let me see, because we can change the color if you prefer. Okay, so the color, I'm not sure whether you can see the color, but let me quickly check. Let me quickly check the inside bar. Right, so the inside bar here, the colors were medium green, Dodger blue, and tomato. So this tomato color is when you see tomato color, it means that the inside bar was broken bearish. So it was broken down, going bearish. That is why it turns tomato color. But if you see it as a blue color, it means the inside bar is broken upwards, that is bullish. So the bullish, it was broken going forward, going upward, that is bullishness. That is why it's blue. You can see it's broken going forward, going upward, that's why it's blue. Also, this is broken going upward, that is why it's blue. Anywhere you see blue one, it means that it is broken going upward, that is why it's blue. Okay, that is how to identify the inside bar. So we know that already. Now, how do we trade this simple strategy? There are only very little criteria you need to be aware of. First of all is the moving average. I've seen this moving average. If you see, it is a 10 simple moving average. 10 simple moving average, not more than that. 10 simple moving average. Okay, so the reason why we make it a 10 moving average is because we want it to be very, very close to the price. We don't want to use a bigger moving average like 50 or 100 or 200. We want something very close to the price. So when price is above that moving average, we are going long. When price is below that moving average, we are going short. That is the first criteria. And the second criteria is just what you see here, which we call the bandwidth indicator, Bollinger bandwidth indicator. It has two colors. It can either go red, okay, or go yellow. Okay, so when it is red, when it goes red, it means we have strong momentum, we have a strong trend in the market. But when it goes yellow, it means that we have a weak trend in the market. And because our strategy is a breakout strategy, you know, inside bar breakout, we want to be breaking out into a strong trend. That is why we are looking for the Bollinger bandwidth to be red. We want the red color all the time. So anytime you see red color, game on. When you see the yellow color, no game, no trade. So anytime you see yellow color, no trade. But when you see the red color, game on. All right, so that's very simple. I hope if anybody has any question, this is the time to ask the question. I'm sure there's not going to be too much question there. Jeff, Jalo, hello, how you doing? Where are you getting to us from today? Okay, all right, so we know that is the case. So here, let's take this for example and see how we trade this. You can see the blue box. All right, when this blue box is broken, it is broken to the upside, so bullish breakout. So when you have a bullish breakout here and it's above moving average and the bandwidth is red, we are going long. So we're going to put two lines here. Okay, let's put two lines here, one here, which is that is where we are going long from, at the break of the mother bar. We call this big candle here the mother bar, and the small one inside it is the inside bar. So when we break the mother bar, that is where we go long. All right, so we go long from there. So we go long once we break that mother bar. We go straight away, we go long here. Okay, from this point we go long, right? we go long from that line. Okay, we go long from that line, and we have to set our, of course, stop loss immediately. And how do we do that? The simplest way to do it is to put your stop loss below the inside bar. Okay, the stop loss is below the inside bar, which the inside bar is this bearish candle, this black candle. So this is your stop loss. So if you went long here, that is going long over there, and your stop loss is going to be that second line. Your stop loss is going to be that second line. Okay, so this is your stop loss here. So you put your stop loss right there on that here. That is where you stop out. And what is your take profit? Very good question. Your take profit, we are going to divide it into several TPs. So we start from TP1, which will be the size of your stop loss. So you measure the size of your stop loss. In this occasion, if I'm going to measure this, this is a 4-hour chart, so it might be significant. Let's see how much it is. Stop loss there is not that much, it's about 20 pips. Okay, so 20 pips stop loss. So your TP1 would also be 20 pips. So let's just gauge it, that's around 20 pips. That's your TP1. Okay, then we are going to move on to TP2, which will be 40 pips. That is your stop loss multiplied by 2. That's about it. Let me move it up a little bit. Okay, so that's no, that's too much. Okay, so that's about 20 pips, and the TP3 is 60 pips. Okay, as you can see, we hit all our TPs 1, 2, 3. In fact, if you like, you can try TP4, which of course maybe you hit it, maybe in fact maybe not. Okay, because when you get here, you are very close. If you measure properly, maybe the TP is a bit lower than that, but I'm just putting it, I'm not measuring right now. So it's most likely that you hit your TP 1, 2 and 3 and not 4, but you are happy you had your TP 1, 2 and 3. Happy days, right? Happy days, happy days, happy days. So all right, to get the inside bar indicator is pretty simple. On this particular video you are watching right now, there's a link there. You click that link, it will take you to where to download it from. So you can just click that link and you can download that indicator. It's free of charge, and it's very, very useful. The indicator is there, and also the template, if you prefer to use the template as well. So it will construct everything for you, including the colors, the moving average, Bollinger Band, width, everything as it is on the screen. Yours will look exactly like that. Okay, so that is principally that is how we trade this strategy. Okay, so it's very simple. That's why I say it's a very simple strategy. Anybody with any question before we cite more examples? Okay, so I'm going to wipe up all these lines. Okay, so let's pick one more example here. Okay, let's look at this one here. Okay, I'm going to take my crosshair. I want to see when the price crosses. See here, the price or the mother bar was broken here, right? Let me put a line. Okay, it's broken here. All right, you can see that is where the mother bar is broken, going upwards, bullish breakout. And you can see the box also turned yellow, blue, showing that we have broken out in the upside. Okay, wow. And also you can see the bandwidth is red. At the point when it breaks, the bandwidth is red. But can we take this trade? Okay, that's a question for everybody. Can we take this trade? Can we take this trade? And if we can't take the trade, tell us why. But if we can, say yes. If we can take it, say yes. If we can't take it, say no. Can we take the trade? All right, let me see. Can we take the trade on this one? Anybody? I'm sure a lot of smart guys will be able to guess the answer on this one. Are we able to take that trade? And that is a why can we take it if we can't? What's the best time frame for this strategy? Okay, we started with 8 hours. Sorry, I said 8 hours. we started with 4 hours. 4 hours, and then you can actually start from daily. What I do is I'm looking for where I can find signal. Okay, wherever I can find signals, I'll take the trade. It depends on your availability. For example, if I'm around for the day to trade, then I could go as low as 5 minutes to look for my trade. But if I'm busy and I'm not at home, or I've done something else, then what I can do is go on a higher time frame, like 4 hours, which I know it doesn't require me to do much effort. I don't have to look at the screen. Even better, I go on daily if I find signal. But the issue is that it's not always easy to find signals on a higher time frame. You might wait for a month, 2 months before you find one signal on a particular currency pair. But the good thing is you don't have to wait for one particular pair. You can look throughout all the pairs and find a good pair to trade, something that gives you the signal. Okay, so good answer. Thank you so much. Okay, Cecile, you answered says no, but Polly Pate, you think it's yes. Okay, so we have opinion divided. Okay, I'm the teacher. So I'm going to tell you what the issue is, and I hope you will agree with me. All right, so remember that we said one of the criteria of our trading is that when we're going long, okay, before we go long, price must be above moving average. Okay, before we go long, price must be above moving average, and when we go short, price must be below moving average. Okay, now this blue box is telling us to go long, right? Because there's a breakout and it's a bullish breakout. It's asking us to go long. But can we go long when we are under moving average? You see now, right? You see the reason why we couldn't go long, even though it looks like a good trade, but because we are under moving average, we couldn't go long. Okay, unlike here, we are above moving average. Here we can go long. I hope that is clear, right? Great stuff. Okay, now let's look at more examples. Let's go a little bit, look for example of a sell. Okay, you see these are all sell signals, but are we going to take this signal number 1, okay, or signal number 2? This is signal number 1 and the other one signal number 2. I need answers. Signal 1 and 2, can we take it? And if we can't take it, why? Why can't we take that signal? Anybody? Why can't we take that signal? So that is signal 1. That's signal 1. Can we take signal 1? And if you can't take signal 1, what about signal 2? What about signal 2? Can we take signal 2? I'll tell you where signal 2 is now. Okay, so signal 2 is just this one here, right? So if we can't take signal 1, what about signal 2? Can we take signal 2 instead of 1? Anybody? And tell me why. If we can't, I want to test your experience. Yes, we can take signal 1, we can take both. Yes, under moving average. Yes, good. Anybody else disagree? Yes. Mashoto says we can take signal 1. Ponyface think we can take 2, both of them. Anybody else? By the way, please do give me a like, please. Click the like button for me if you enjoy what we are doing here, so that it can encourage us. Give us a like button. Thank you. Who is say what they said? No, because hey, Cecil. All right, Cecil says no because the BB wheat is yellow. Let's check it out. All right, so look at number 1. Okay, even though, as Ponipe said, it is formed below and it's a bearish breakout which is below the moving average. That is correct, but check the bandwidth is yellow. Even if this is correct but the bandwidth is yellow, no trade. This is also correct because there's a bearish breakout which we should have taken, but bandwidth is yellow, so no trade. Okay, so not only that it has to agree with moving average, it also has to have a red bandwidth. Okay, thank you so much for your answers. So that explains why this is not a trade. That explains why this is not a trade, and that is not a trade. And you see, we are looking at 4 hours. You see how difficult it is to get a trade. And that is okay. This one is not a trade. Why? You know that now, okay? Because it's a bullish breakout under moving average. Even though you can see that the bandwidth is red. But let's check this one. Okay, I'm going to give you an exercise. Okay, so the exercise is this. I'm going to label two of this thing here. Okay, I'm going to label number 1 and I will label number 2. Okay, so let me do number 1 here and you tell me which of them is a valid trade. So this is trade number 1 here. This is number 1 here, and I'm going to do the second one and tell me is it 1 or 2 or even 3, which one is a valid trade. So that is number 1, this is number 2, this is number 2, and I'm going to make this number 3. Okay, so 1, 2, 3, I want you to tell me which one is a valid trade. 1, 2 or 3. So 1 valid, 2 if it's valid you say valid, if 3 is valid you say valid. Okay, so 1 is 1, 2 or 3, which one is valid? Okay, just put valid or invalid or yes or no, either. So we have this trade here, this trade here, and this trade here. Okay, let's see who is on the money. Who is on the money here? We can, okay, Andy. All right, Andy is giving us a thumbs up. Thank you so much, Andy. Like your 2 thumbs up, great stuff. But I need the answers. Who is answering my question? Who is telling me the answer? I've got 1, 2, 3. Which of the 3 is the right trade? Which one can we take? Can we take trade number 1? If you agree with number 1, you say 1 yes. If you agree with 2, you say 2 yes. If you agree with 3, you say 3 yes. However, if you disagree with 1, you say 1 no. 2, if you disagree, no, you say 2 no. If you disagree with 3, you say 3 no. Yes. Who's getting it? Yes. All right, so Brandon, 1 and 2 are valid, 3 is not valid. Okay, Isaac says 2 is valid. Okay, Monso says 1 and 2 valid and 3 invalid. Okay, anymore? You can see number 1 looks like a fantastic trade, isn't it? Even number 2 also look like a fantastic trade, right? Number 3, all right, let's see anybody else before we tell the answer. All right, okay, so wow, so the first trade is a valid trade. Okay, there are 2 things we are checking. We are checking if it's a bearish breakout that is breaking out downside, it must be done underneath the MA, which is correct. It's done underneath the MA, and also at that same time, second condition, bandwidth is read. So trade number 1, good. Let's move to trade number 2. Trade number 2 here is also a sell trade, bearish breakout underneath the MA, correct. Bandwidth is also red, correct. Now let's turn to trade number 3. Trade number 3 is a bullish breakout. You can see it's a bullish breakout because the bar that break it was above the box. Is breaking above the box. That is a bullish breakout. But where is the price compared to the MA? Below, and we cannot buy below MA, even though we have the red bandwidth. So that is why trade number 3 is invalid. Who got it right? Who got it right? So who got it right? Okay, so Nashoto got it right, Isaac got it right, Brandon got it right, Cecil got it right. Okay, Andy, you know why number 3 is not valid now, right? Yeah, so 3 is not valid for the reasons we have explained. All right, let's move further again so that it can become more clearer. I will bring something that is controversial so that you can understand this strategy very well. Oh, as we go, I just point out to the valid and invalid so you can see. This is the one we have checked. Okay, this one is invalid. You know why? Yellow. Invalid, yellow. Invalid, yellow. Invalid, yellow. Okay, let's see more. If we get more, this also is invalid, yellow. Aha, right. Ladies and gentlemen, tell me, this is let me make this one trade number 1 now, right? So this is trade 1. I want to tell me whether it's valid or invalid. Trade 1. Okay, this is trade 1. Is trade 1 valid or invalid? 1 valid or invalid? Look at where the MA is. Look at where the breakout happens, and look at the Bollinger Band width. Valid, invalid? Let's see. Okay, Isaac, you got it now, right? Isaac, you got it. That's good. Brilliant. Okay, so anybody, is this one valid or invalid? Okay, what about trade number 2? This is also interesting. Trade number 2 is also interesting. It looks like a good trade. All right, let's see whether it makes sense to go for it or not. Okay, let's do it. Okay, so this is 1. Okay, has anybody answered that question yet? Okay, so more example. Okay, yes, we're going for more example. Don't worry, we're going for more example. So I'm asking, is this trade valid? That number 1 here is a valid, and is this also valid? Remember the conditions. Okay, and also I'm going to make this number 3 because I think some of you understand it very well, but for those people who doesn't understand, it's also good to just take some time to explain it very well. Okay, so this is number 3. Is number 1 valid? 2 is invalid. 3 is invalid. So this is number 3 here. So this is trade number 3. All right, let's see. What do you think? What do you think? What do you think? What do you think? Okay, so which one is valid? Brandon, 1, 2, or 3? Isaac, 1, 2, or 3? Which one is valid? You have to put a number. Okay, no to all. Okay, yes. Andy says no to all. Let's see, no to all. Is it to all these 3 or the previous ones? Okay. All right. Right, so should I tell you the answer or anybody is answering it? Okay, so let me give you a clue. Okay, the clue is that number 1, number 2 and 3, they have the same answer, but number 1 has a different answer. Number 1 and 2, 3 and 2 have the same answer, but number 1 has a different answer. That's a clue. Anybody? Okay, anybody? That's a clue. That should give you an idea of which one is right, which one is valid or invalid. Okay, all right. While you think about it, we will carry on. Okay, so I'll tell you the answer. All right, so number 1, it is valid because everything is right. It breaks below moving average, bearish breakout, the bandwidth is yellow. Here it is invalid even though it breaks above moving average, which is good for buy, but the bandwidth is yellow. Oh, by the way, let's check. You need to be sure when it crosses, what is the bandwidth. You can see when it crosses, the bandwidth is still yellow, so that's why there's no trade there. The same thing happened here. Bandwidth is still yellow. Same thing here, yellow. This one also yellow. All right, I think we got good gist of this now. So if we like, we can change time frame. Okay, we can change time frame. That's not valid. This is not valid. Let me see. When it crosses, it crosses at the edge, so this is a valid one. Okay, let's see more. Okay, these ones are not valid. This one is a valid trade. This is not valid. It happens above moving average. Let's see. These two are not valid. Yellow. All these three are not valid. They are under yellow. All these ones are under yellow. All of these are under yellow. See, sometimes some currency, but this one, let's see, this one is a valid trade. It happened right before it changes to yellow. You can still see the last red bandwidth, so it's a valid trade. So you don't get trade every day, but by the time you use a lot of you scan through all these pairs, so that's why I can use this thing like this and scan through the pairs. So if I click GBP USD and I can move to the next pair, I can move to GBP USD and start to analyze GBP USD. Okay, so for example, here there is no trade here on GBP USD. Here, let's see where we got trade. Let's see, here there is no trade. Let's see where we got trade. Yes, here we got a trade. See, beautiful trade. Let's check. Nearly. It just, there's one yellow there. There's one yellow there, but this one is a beautiful trade. That one is not a trade, but this one it is. This one is a trade because they are all above moving average and they are yellow, under red. It's a brilliant trade. So you see, I'm not jumping above any of the signal. I'm just looking at everything. This is also a trade. This one is not a trade because it's happened under yellow here. But this one, let me see. This one, when it happened here, is a trade. This one is the first tomato box is a trade. The second tomato box is not a trade. By the way, when you are inside this first tomato box, you don't even have time to look at the second tomato box because you are still in this trade anyway. So you are hitting your TP1 and probably your TP2. Okay, great stuff. I hope the questions are all, it is all good, right? Yeah, I can see all your answers. Sure. I think all of you got it right. You got it right. One is valid, two is invalid. Yes. Okay, take one valid because trade one is valid because below moving average. Yes, that's correct. Trade two invalid. That's correct. 2 and 3 invalid. Yes. Moving average period. Okay, yes, moving average period is 10. It's 10 MA. Simple moving average. It is just a common simple moving average, nothing more, nothing less. All right, you can see fantastic trade. So let's say we take this example of this trade here. This is where you are going to put your buy stop. So you're going to put your buy stop here and you go long, right? So you go long here, and this strategy is very good because it gives you a very good risk reward ratio. So you put your stop loss below the inside bar. You see, that's your tiny stop loss, but look at your potential profit here, maybe 1:5 ratio, 1:5 or even more. All right, so this is your stop loss, and then you start making your trade. So TP1, TP2, TP3, TP4, TP5, TP6, maybe as much as you can, and keep moving, keep trailing your position, keep trailing. Once you hit TP1, you move your stop loss to break even. Once you hit TP2, you move your stop loss to TP1. Once you go to break, when you take TP3 out, you move your stop loss to TP2, and on until you are stopped out eventually. Okay, so we are looking at GBP 4 hour. For argument's sake, let's drop down to lower time frame. Let's drop down to 5 minutes and see how it works. We can use GBP or we can use another pair. It doesn't matter which pair it is. It is the same, exactly the same thing every time. Okay, so this is GBP. All right, all this, there no trade because we are yellow. No trade. Let's see when we first get our first red. When we first get our red Bollinger Band, we got red Bollinger Band here, but it's short-lived, so we can't trade anything there. Let's see if we can get more. It's all yellow here. Okay, now we are starting to get some red. Okay, now we got red here. Okay, here we can trade this candle. Also, we can trade that signal. That's number 2. Okay, this is not tradable because it's a breakout. It's a bullish breakout, but oh, by the way, you can see it's a bullish breakout, but it does break out above moving average, so we can take this trade as well. Okay, no, this one we can't take this trade. This one we can't. No. Let's see anything in this red zone. Yes, this is a trade we can take. No, because it's under yellow, we can't take this trade. This trade, yes, we can take that trade. This trade, no. Oh yes, we can't take this trade because it's above moving average and it's also red. Okay, so it's so simple, guys. So simple system. All right, any more questions? Any more question from anybody? So as I said, the indicator is available to download. When you just check the description of this video, over there you will see the indicator. Just click download, just click the link. It will take you to where you are going to download it. Okay, so any more questions? I think we are all good and clear. Okay, so I want to announce something to you, but next time we are doing our 1-year anniversary on your trade mentor, and if you can attend my lesson next week, I got something for you. Not today because I'm cooking it. I'm getting it ready for you. So next week, make sure you don't miss this lesson. I will post the time on the YouTube channel next week. I will probably share you something different also. Apart from this strategy, I have something else that I'm going to show you, or something to add to it next week. And also, I got you something to celebrate with me for my 1-year anniversary, and for you guys to be with us since the last year. You've been watching this YouTube channel, and you deserve some pat at the back. So join me again next week, because something is coming on your way. So let me say hello to everybody that has been here today. I won't be able to tell everybody, but I see Podipate is here. Congratulations, Ponipe. You are the first one that joined us today from California. Wonderful. Andy, thank you. Oh, Zaki. Good. Jano, right. Thank you. Brandon, good to see you. Cecile, good. You ask a lot of good questions. That's fantastic. Who else? Mashoto, good to see you. Who else is there today? I hope I haven't missed anybody out. Isaac, good to see you. Who else is there? Okay, Musrat is there too. Musrat, good to see you. Who else? Anybody else? Sure I haven't missed anybody out. If you are there, you haven't said anything yet, you can pop it in so I can mention your name. I can put your name on the map. Hey, good guys. And Mashoto, yes, Mashoto is there too, yes. Oh, Delton, good to see you. Yes, everybody participated today, which is wonderful, and I enjoy it. I enjoy every second of it. Good stuff. So, as I said, guys, meet me up next week. Get ready, get prepared, be excited for it. I got something to show you next week, and I hope you keep well, and I hope you keep safe as well. So thank you so much. Enjoy the rest of your evening or morning or day. Take care, guys. Bye.